Looking to buy a home? How about sell one? Well, goodness knows the interest rates out there are probably putting quite a damper on your thoughts either way. If you can wait in hopes that the interest rates will be coming down, you may have a tendency to do that, although I'm not sure that in the short run that's likely to happen either. We'll get the opinion of somebody much closer to the scene than I am, and that would be GP Theriot, mortgage advisor at the Theriot mortgage team. Good evening.
Good evening. Thanks for having me on this evening.
Absolutely. First of all, for those who look at what interest rates are doing right now, and they say, "Oh, I can wait a few months." You think the interest rates are going to go down in a few months?
I don't think in a few months they're going to go down. I don't think we're going to see them accelerate like they have. I mean, they've gone up a full 2% since this year, and I think we're going to see them continue to go up. The question is, will we hit that 8% mark? I don't know. We could see 7.5%. I think the Feds, they're talking about raising the rates 2 more times before the end of the year. Now, the Fed fund rate does not play a direct, factor towards mortgage rates, but it does play an impact, due to inflation. Like I say, inflation is the enemy of long-term mortgage rates.
Mm-hmm. Well, yeah, as long as the Fed uses interest rates to try and tamp down inflation, absolutely. And I'm not sure that there really is another mechanism available to the Fed, really. I mean, wouldn't you say that's about all they've got?
Pretty much for right now. I think they do. I think to slow things down. So, the question is, so what do I do, GP? Do I wait for rates to go down? Well, when will rates go down is the question. But when they do go down, you're going to be in the same playing field just like everybody else. I think now is a great time to get in the game of looking at buying a home. Now, the key to that, though, is you've got to talk to a professional mortgage loan officer and a real estate agent so you can have a strategy and truly understand what you're getting into right now in buying a home.
Now, before you even go into buying a home right now, don't interest rates pretty much have divided the potential home market into 2 groups? One, those who want something new right now, and 2, those who have to get something new right now. Their economic circumstances, empty nesters, what have you. In other words, if you've got to buy a home right now, then you'll hang in. But if it's just a desire, we'd like something with more space or less space, whatever. We'd like something in a milder climate, whatever. Those people can wait.
Absolutely. I think, absolutely. Every scenario is different for everybody out there. But let's say the people that are renting right now, rent rate, this is the fastest it's going up. It's only going to continue to go up. And that's a variable, meaning, you might have a 12-month lease or you might have a 3-year lease, but that rent, what you're paying is going to go up to where if you get in now, at least you're securing a rate, not the rate that you want. But here's the thing. When rates do go down, and they are going to go down, and that's the million-dollar question, when are rates going to go down? And we can talk about that, too, more in depth. But, the saying out there on the street is fall in love with the home, but date the rate, meaning you can refinance that rate when rates do go down at any time.
Well, there is that, too. You can refinance the rate. That's certainly true. But then you're really, now you've taken this whole thing to Las Vegas or Atlantic City. Now you're gambling on when they go down.
So I love that. So I had this conversation. I tell people, this is just me now, but and I'm not a gambling betting man, but if I was, with the data that I've been looking at and with people a lot smarter than me, economists out there, I really do think you're going to see rates go down in 24 months or less. I mean, some are predicting by the third quarter of next year, we could see rates getting back in the 5s. Some are even mentioning possibly under 5%. So, there's all sorts of strategies that we're advising our clients that are wanting to look at options to at least getting the lowest payment possible. And right now, ARMs, adjustable rate mortgage, that's a big thing right now that we're advising clients to look into if you have the right strategy.
Wasn't that once a big thing and then it became not so big a thing?
Absolutely. I mean, ARMs weren't mentioned for the past 2 years or 3 years just because the 30-year fixed long-term rates were at all-time lows, and they were actually lower than adjustable rate mortgages. So you weren't having those conversations. But look, I've been doing this for 19 years, and I can tell you before that, I did a lot of ARMs back in the day because of the strategy that we looked at. And what I love to share with clients on adjustable rate mortgages is that, look, I get it. In the 80s, it was a bad product. They didn't have what's called a life cap. So these horror stories where you heard rates getting in the teens and 20s, it scares people off, and they hear variable, and that scares them. But again, when you talk to a mortgage professional that can truly talk you through it, there's a life cap on adjustable rate mortgages. So how does a ARM work, adjustable rate mortgage? You have a 5-year, a 7-year, or a 10-year option. What that means is the rate is locked in either for 5 years, 7 years, or 10 years. Let's go simple and use the 5-year, because right now, if you have the risk tolerance, I've got a lot of clients that are locking into a 5-year adjustable rate mortgage because, again, we're betting that rates will go down in 5 years or less. Again, I think it's going to be 24 months or less. So I truly think you're protected for this option. But let's say if it doesn't, what happens after 5 years? The rate that's when it'll adjust. So at 5 years, that's 60 months. On the 61st month is that first adjustment. Now, they fine-tuned the product. So you actually have variables, meaning the life cap on it, it cannot adjust more than 5%. So let's say we locked you in. We've got a product right now on a 5-year ARM at 4.75%, which is outstanding. People hear that and they're like, okay, tell me more about this. And worst case scenario is at a 5% life cap, it could never exceed 9.75. So you're adding that 5% life cap to your start rate that's locked in for 5 years. If it does hit that 9.75, I can tell you right now, rates are going to be in double digits for long term. So that's a whole nother conversation. And are we ever going to see double digits in the next 10, 20 years in mortgage rates? I don't know. I've been doing this 19 years and they haven't gotten there yet. So again, I know I'm throwing a lot at you right now, and we can kind of take a step back and kind of dissect this a little bit more, but I just really want to set the tone. I'm very optimistic. I think real estate is always a great time to buy. Yes, I know there's a lot of fear and unknown out there, but we've got to educate our clients, and we got to show them the strategies why it's still always a good time to buy real estate, because real estate is the number one way to continue to build your wealth.
Well, like Will Rogers said, invest in real estate. They ain't making any more. But even then, timing does play a role. I mean, we have an active adult lifetime, I guess, as a home buyer, say from, for the most part, about 30 years, 25 to 55. Before that, you're a kid, and after that, you're wrapping up your home buying days. Would that be accurate?
Are you talking about like on a 30-year?
I'm saying that for most people, there is about a 30-year span of home buying, say from 25 to say 55. Before 25, you're a kid or you're just getting out of college. After 55, you're looking ahead to retirement, and you may not be in that much of a hurry to buy, at least not in terms of the buying side. Maybe you're interested in selling. But it's not. It doesn't last forever. It's what I'm saying.
No. I mean, I love when I hear 20-year-olds wanting to buy. Again, I mean, they're thinking rent. They want to be in the hipster, cool locations, cool places. Because I know that's how I was in my 20s, right? And I think again, we have to get out there and really educate especially these younger buyers. On why start off early buying real estate. I wish somebody would have taken me under their wing and say, especially I'm a veteran. So I served in the military. So I had the option of using my VA benefit at 100%, which I have used. But I wish somebody would have told me back in my 20s, start buying real estate now and taking advantage of your VA benefit and continue to build on that. So you can, if you want to build a portfolio with investment properties, second homes. And then when you get to that point, that 30-year time span that you're talking about, absolutely you can start selling it. Now, we can't predict that time span when you sell it, what is the property going to be worth? But if we look at history and the data, real estate has been pretty steady on appreciating consistently every year to where you're building equity and building wealth with your real estate.
To buy a home, to sell a home with all those interest rates taking off, risky territory, I think many of us might think. But again, a good navigator of such territory is GP Theriot. He is the mortgage advisor at the Theriot mortgage team. Where are you located physically?
Yeah, I'm located in Dallas, Texas,
okay.
but I'm licensed to do all states here. And again, I'm happy to talk to anyone and love to give them advice, at least if they have any questions.
Our guest is GP Theriot, mortgage advisor at the Dallas-based Theriot mortgage team. And here's a call from Josh in Burnsboro, Pennsylvania.
Hey there, Jimbo.
Hi there. Welcome.
Hello.
What's on your mind, Josh?
Hey, I just wanted to say I wanted to thank you so much for your guest tonight talking about real estate. It is so important. My great-grandfather on the property I'm living on right now, he was a union plumber in Philadelphia, and he worked his tail off, and he bought this property along with other properties and continued to establish himself over the years, and he created a business. And we created a manufactured home community, many of them. And
But he built houses. Is that what you're saying?
No, what I'm saying is he bought the land, and then we brought the homes in onto the properties.
What, prefab homes or what?
Yeah, manufactured homes. Yeah.
Oh, okay. All right. Well, very good. Did you have a question or comment for our guest?
Well, I think my question for your guest is, how much land should you buy? And I heard your guest say earlier, and that's why I wanted to call in. My grandfather always told me, he said, they're never going to make any more land.
Right.
You buy as much as you can.
Well, I don't know that most people are interested in buying a ton of land. Most people are interested in buying enough on which to live, but I'll defer to GP Theriot. Good evening. What do you have for our guest? I mean, our caller, GP.
Well, I mean, how much land can you buy? One is what's available. I mean, right now, like you said, it's hard to find land, and if you can find it, and if you have a portfolio where you can afford it, then again, I'm a huge real estate. I think if you have opportunity to buy real estate and it fits your business model, your goals of what you're looking at, and I think, manufactured homes, what you're doing, I know that's a big business. That's not a niche of mine, so I can't really talk on that, but I know people that are very successful with that. So if it's out there, if you can find it, go for it.
I would think that in times of such high interest rates, that there would be less interest in doing anything but hunkering down and waiting for the interest rates to go down. Maybe that's just my own limited mindset, GP.
Yeah, again, I think we're putting so much fear out there, and that's where I like to come in, and we've got to just educate our clients. And again, we talked about it earlier on the show. Every scenario is different for everybody. But if you're considering I'm on the fence right now, GP, I was beat down, the past year or the past 2 years, it was a crazy frenzy of just properties going off the market in 24 hours with cash buyers and just, and, those first-time home buyers that were trying to get in the market couldn't now. Well, now inventory's picking up, and there's just a bigger opportunity to get the deals. Yes, rates are going up, but guess what? These sellers are starting to kind of freak out if their property's not under contract in a week or so. And so now you're seeing either they're reducing the sales price. And what I'm advising is my referral partners, real estate agents out there, that the hardest conversation they have to have for sellers is to go to them and say, look, we've got to reduce your sales price. Because, look, they want those prices that people were getting 2 years ago. Well, that's not going to happen. The market is shifting, and we're getting back to the normal. But strategies with these rates going up, we're having our buyers go into these sellers and asking them to buy down the rate, not reducing the sales price, because you're not going to see as big as a dent as you are if we can get that rate bought by the sellers a full percent. Well, now we're talking savings of almost $300 to $400 difference in a monthly mortgage payment.
Yeah. All right. So the market does change, certainly. Yeah, there's no question about that. I had occasion to sell a house back in 2015, and we had two bids, and both of them were in excess of the asking price. So we sold that house in like 2 days. Those days are gone.
I mean, unless it's priced just absolutely right, yes. Because, I mean, a lot of these sellers, it's kind of like a tug of war is what I'm telling people, meaning the sellers still want top dollar, but then the buyer knows that they've got a little bit more leverage where they can actually negotiate and take their time. So it's kind of this kind of, okay, who's going to, a tug of war of, well, I want the best deal on my end, but also the seller wants top market. So it's an interesting market right now of, who's going to win the strategy.
All right, well, we'll come back and we'll talk some more about that interesting market with GP Theriot, talking about some of the issues that are facing home buyers and sellers right now in this era of high interest rates. Here is Frank in Lone Oak, Texas. Hello.
Hello, Jimbo. Good to talk to a fellow Dallas area Texan. And we're in a little town east of there, and Dallas is a suburb of our little town.
Well, I dare say.
Yeah. I'm calling with regard to your presumption that you can't buy too much land. I think we have. And the reason I say that is we bought a good-sized farm, and we used it for 30 years. And now in advancing years, I face a situation where my wife and I both might end up in a nursing home. And running up medical bills while there. And if this property is still in our name, is it going to be nibbled to death by liens against it in that event if we can't pay? And if there's a protective method to use in that event, I'm curious what it might be. And
Okay.
That's kind of what I had.
All right, well, let's ask our guest about that. Something that comes quickly to mind here is the reverse mortgage. When you are equity rich and liquidity poor, and you can't saw off a piece of aluminum siding and go down to the grocery store and buy a loaf of bread, GP.
That's exactly what I was going to ask first is I would look into a reverse mortgage. Do you know if you have equity in the property? Do you know what's your balance? Do you have a mortgage on it right now?
No.
So
No
it's
mortgage?
paid off. It's 100% yours.
Yeah, well, it's a peculiar property too. It's on a fairly popular lake, and I think your guest probably
Right, but the question was to get right to the core of what I think GP is getting at. You own it all. The bank doesn't own any of it anymore. Is that right?
No banks, no finance.
Got it. Okay, there you go, GP.
Well, you're in a great position then. I mean, good for you, first off. You've got a lot you can do with it. I think, one would be look at the reverse mortgage. I take it, you said you're retired? Is that correct?
Some time ago.
Yeah, he's retired. He's retired.
Retired. Okay. Yeah. Yeah. I don't do reverse mortgages, but I know it's a great option to look at because you are protected and there's ways to take full advantage of that. You could look at, just doing a standard like home equity type loan. The only challenges you're going to run into that is meeting certain guidelines of, that's where they want to verify income and certain things where reverse mortgage is not as in depth. Or your other option is, there's plenty of people out there that'd be interested. You said sooner or late to sell it if that's something you want to consider too. So you've got options. You're in a good position where you definitely have options.
Might want the property, but she's inclined to want to sell it. And if we do sell it, will the proceeds from that sale be exposed to
capital gains taxes?
What's that?
I was just suggesting.
Yes, we're in Texas.
Well, you said a lien?
Yeah.
You don't have
I guess I'm not enough of an expert to know how a lien fits into this, GP.
No, it's paid full and clear unless you have any like tax liens or personal tax liens. But on property lines, if you don't have a mortgage on that, you're in a great position.
Yeah.
I would really consider. I would consider talking to somebody that does reverse mortgages, and you're welcome to reach out to me, and I can get you in contact with somebody. I do not do reverse mortgages, but I can definitely assist you on at least talking to somebody looking at that as an option.
Yeah, you're in good shape there, Frank.
Mm-hmm.
So, good luck to you, sir. As we go to Ray in Enterprise, Alabama. Good evening.
Hey, Bo, thanks for taking my call. I had a question for your guest, and I know it may not be exactly in your wheelhouse, but any knowledge, experience, advice is more than I have now.
Mm-hmm.
But
okay.
I've always been told to stay away from manufactured homes, double wides, because all they do is depreciate. They do not gain value. Is that correct?
Yeah, I'm happy to answer that. Yes, I'm not a fan of manufactured homes. I know people where they've had success with is where they're treating it like kind of like an RV park, and they're renting them out or just buying land for people to bring their RVs. But you're absolutely right, because it's not stable. It can move. It's just like a condo. I'm not a fan of buying condos because you're just buying space. You're not buying dirt. So again, it's not my wheelhouse. I don't do a lot of manufactured homes, but I'd be looking for single family dwelling type homes that are already established in a neighborhood.
Is that helpful,
that's my
Ray?
opinion.
Yeah. Is that helpful, Ray?
It's confirmed what I've always heard. Yes, sir. So I've always heard you can plate it in 24 karat gold, and it still doesn't matter. It's still going to lose value. So, yeah.
Okay.
You're right. Hey, sorry, real quick, I'll share the story. I had a buddy of mine. He bought a manufactured home in an area that had other manufactured homes that he thought he could treat it as an Airbnb. And he put all this money into it to try to make it all fancy. And he lost his butt on that. It was a horrible investment. That's why I stay away from that kind of stuff.
Mm-hmm. What about mobile home parks and this sort of thing? There you are buying dirt, and you're renting, leasing, or whatever it out to other people.
Right. Yeah, that's a different conversation. That I know people have had great success with that. So big fan of that because you're using it as a cash flow at that point.
GP Theriot, our guest tonight, mortgage advisor at the Dallas-based Theriot Mortgage Team. Let's talk to Bill in Tyler, Texas now. Good evening.
Hello. One option that the gentleman might do if he has children is a living will, because that way he could divide it among his children and stay there, him and his wife, the rest of their life. Nobody could get them off there. And I don't think there's any limits to something, maybe a couple of years waiting time or something.
Mm-hmm. That is certainly one way. I know I'll offer one more alternative before GP responds. I'm an only child. My mother was a very trusting lady, and she just simply put everything in my name, so that when, that is to say, both our names, so that when she died, I was the only surviving owner, which I am told let me avoid a lot of probate-related issues. GP?
Yeah, probate is always the big thing on that. I recommend, if you haven't gotten with some type of attorney, just to be sure it's set up correctly, because I've seen it, just on my experience where a family member, passed away and they thought they were set up properly and they weren't. So the key to that is just be sure you have your ducks in a row and you're set up properly. And again, it's working with the right professionals.
Yeah.
And by the way, Tyler, I just want to share Tyler. My nephew's at University of Texas Tyler on the golf team there. So great to hear from a Tyler.
There you go. All right, fair enough. All right, 1-866-50-JIMBO, 1-866-505-4626. Cameron in Butte, Montana. Good evening.
Good evening, Jimbo, and thanks for putting on such an excellent show again. I was also calling in to follow up on that Frank Fellow's concern in Texas, and his concern of losing that property to liens is a valid one. And but you guys hit it on the head. Just mainly if he can get it out of his name, either into an heir or an LLC, he could put it in an LLC. And
for those of us not familiar with the initials, what is an LLC?
A limited liability company. It's just one of the better ways I've found to put property into, to basically hedge against liability. And there's various ways to do that. He'd probably be better off talking to a real estate attorney. But and then also just to tell him that if he does have to sell it, just not to sell it too cheap. Make sure to get a good appraisal on it, because he might be surprised. Okay,
GP.
Yeah, he hit all the notes. Appraisals are always good to have, because that also sets in the reality, because people love to think that their home is worth a lot more than it is when they get the data with an appraisal. So, yeah, he's absolutely right.
Okay, very good. Thank you. Much appreciate your call. Lex in Wilmington, Delaware now. Good evening.
Yeah, hi, Jim. Listen, here's the situation I have. I've got a real estate property hanging in midair. What I mean by that is my mom was the owner, and she passed away, and she passed away at a very bad time because they were ready to close on the property. In other words, the buyer already put the money down, and they got a mortgage from a bank. And the problem here is that she died. She was very ill and suddenly died. And I'm in the will. We have the will with a lawyer now. And I have been named as the new owner of the home. The problem is the will is in probate. Now, what I'm more concerned about, not so much about the probate, I'm concerned more about how much time do these banks, give the people, the buyers, in terms of an extension, because they already got now, this is their first extension.
Okay.
Yeah.
GP,
well, yeah. It's definitely it's case by case by the bank on that, but hopefully they can work with them because you've got to go through all the trials of getting everything aligned on that. So it's really going to be. I would talk with the buyers. What's the conversation they've had with the bank on, the rate? Are they going to lose their rate? Can they continue to extend the current rate they have locked in? There's just a lot of stuff they need to ask to be aligned and just get the paperwork in order.
Yeah. Did that answer your questions?
Yeah, but what I'm concerned about too, just real brief. That the case has got to go before the court and it's got to be decided. Now that might take some time. Could they get, what I'm concerned about, could they get another extension?
Absolutely. Again, it depends on the banks. Every bank is different. Like they might allow one 30-day extension, or they might allow additional up to, let's say, 120 days of extensions. That's what I'm saying. They need to find out through their lender, the bank, is how many more extensions can they get. And worst case scenario is like they might say, we're not going to allow another extension on your current rate. We're going to go on worst case scenario, meaning let that rate expire because they can't get another extension. And they're just going to go on based off, is the rate worse today when you originally locked it? Or if it's better, they'll just keep the current rate. So they've got to be able to work with you based off your scenario. Some of the things that they might, depending on if it's going to take 30 days, 6 days, 90 days. Who knows? I'm not sure how long the process will take on your end. So they might have to get updated documentation, such as, new bank statements, just to keep their file up to date.
Yeah.
But they should be able to work through that. It's just, you just got to be sure they're communicating properly. And I would be sure that buyer is communicating with their bank or their lender.
We're just looking at the various hurdles you have to follow as you go through the high interest rate period we're in. Is the high rate of interest forcing home buyers to go after smaller houses, GP?
Well, obviously, payment plays a big part in that. What's my mortgage payment, GP? And, based off purchase price, they are having to adjust to find something maybe at less cost, which means maybe they would have to do some improvements to it. So let's say if we had a client that had 20% saved up and they were wanting to buy, let's say, a $500,000 house. Well, let's say they find that $400,000 house and maybe put 10% down and use that additional 10% to add improvement to the house. And now I guarantee you they'll get their money back based off how properties continue to appreciate. So again, we're talking strategies. We just have to have those consultations they truly understand what they're getting into, but also when they're in the market looking for a home, they have full confidence that they understand what they're getting into.
Mm-hmm. Yeah. Are most people fairly conversant with what they need to know? My guess would be that you deal with an awful lot of people who virtually need to be led by the hand into this whole process.
They absolutely have to be led by their hand because they hear one, they think they have to put 20% down. Two, these rates are so high, GP, I can't afford it. Or I love the one is where my credit won't qualify. And I love saying this, you don't know what you don't know until you talk to someone. So at least have the conversation to get an understanding of, is home ownership the right thing for you? Does it make sense right now? Because, I do have clients where it's not the right timing right now, but let's have a plan in place. And if it is 6 months, 12 months from now to where you're ready, and if these rates come back down, we know kind of that target, what we need to be looking for.
Mm-hmm. Is there ever a time when conditions are such that nobody should be considering home ownership or property ownership?
Well, I think the biggest time, what we look at is the key piece of when anybody does an application is that credit report. That credit report, I can look at a credit report and tell me I could make a decision just by looking at a credit report. One, based off, their credit score. Two, based off their debt, their current debt that they have. And so the two most important things we look at is their credit score. And then two is their debt to income ratio. And some people are just, they're living in a fantasy world thinking they want home ownership, but they just don't qualify. And if they don't qualify, that's okay. But let's have that conversation to let you know what you need to do to get qualified. Because I've seen credit reports where they're not paying their bills. So do you think somebody's going to want to give you a loan for a mortgage? No. But we've got to go over all that but give them a plan.
Our discussion about those high interest rates and real estate with GP Theriot, mortgage advisor at the Dallas-based Theriot mortgage team. And again, the number 1-866-50-JIMBO, 1-866-505-4626. In terms of, let's say, young people, and they really haven't settled into their career yet. Maybe they're really not. They haven't really picked one. Maybe they're still working at Starbucks or something, and they're not sure if they're going to stay in a given area. In other words, they have no family. They have no dependents. They're about as footloose and fancy-free as they can possibly get. Is this the kind of person who should be buying property?
If they qualify, yes. I'm a believer in buying real estate. Why would you want to rent? And if you saw the numbers of paying rent that you do not benefit from whatsoever, you're making your landlord or the rental company rich to where if you can qualify to buy a home and build the wealth and build the equity, it just makes more sense. But again, these young buyers, they don't think that way. And that's why it's critical to get them, in front of a professional like myself, and I can show them the numbers and what it can do for them to start at a young age to start building their wealth. Because again, real estate's the number one way to build wealth.
I suppose that there may be a certain feeling, misplaced perhaps, but a certain feeling that when I sign a deed, when I get a loan, when I buy a piece of property, I'm somehow tied down at an age when some of these people don't really want to be tied down. Now, maybe they're not really tied down, but I'm wondering if that attitude may raise itself.
Well, what do you mean tied down?
I mean, well, now I'm stuck here in Portland when I would rather be in Pensacola or what have you. In other words, maybe there's a certain misunderstanding of the obligations of a property owner. Maybe they feel like, well, now I've got to have a steady paycheck. I've got this obligation. I've got this bank loan. Just the general feeling that I guess that they're becoming grown-ups maybe on a little faster timetable than they had intended to.
Well, there's so many options when you own a home. I mean, one, let's say if they are tied down, I don't like that word tied down. I mean, because with real estate, you can do whatever you want with it, meaning, okay, GP, I closed on this home, had a good job, I lost the job. Well, guess what? You can have roommates to pay you rent one way. Let's say if you want to move out of the state or move somewhere else because your job's taking you somewhere else, well, you got two great options. One, you can keep that as an investment property, which means now you're getting residual income of cash flow monthly while you're still building equity in that property. Or two, you can sell it. And hopefully, I mean, the odds are you're going to make money off of that because property, the average appreciation value is anywhere between 3 to 6%. I mean, if you're getting 4% on a return, you're doing pretty good, I would say.
Mm-hmm. All right. Very good. Ardell in Reading, Pennsylvania now. Good evening.
I have a question for your, or a statement anyway, for your guest. Mm-hmm. Yes. I don't know if this is going on all over the United States, but well, I'm here now 50 years, so of course I don't have a mortgage anymore. My husband passed 9 years ago. Now I get postcards in the mail. They actually take a picture of my house from the outside. I can see where they're standing from the shadow and all. And they say they will buy my house as is, no questions asked. They'll do repairs and all. I could even determine the settlement date for cash. Now this just sounds too good to be true. Now I just wonder, is this something going on all over the United States or just in my area?
You want me to jump in?
Yes, GW, please.
Yeah. So, yes, it's going on everywhere. And what that is, those are investors, and they're just trying to get a wholesale price. So they're making it look attractive to where, hey, we'll pay you cash, no headaches if we buy it. But they're also they're offering it a much lower price. If you are considering selling, if that's gotten your interest because you are getting those letters, that's when you call a real estate professional because they're going to get you a whole lot more money for your home.
So these people that are contacting folks like Ardell are looking, well, I mean, maybe rip you off is an unfair statement, but shall we say getting your home from you at a bargain basement rate.
Mm-hmm. Absolutely. I mean,
yes.
Absolutely. Yeah, absolutely. That's all they're doing. They're probably looking at one or two things. They want to wholesale it. So what does that mean? Well, they're paying you cash, but they're turning right around saying, hey, I've got this home. Let's say you're going to sell for, I'm just using numbers now, $200,000. Oh, guess what? They're turning around to try to sell it for $300,000. You see what I'm getting at? Again, though, they're trying to show you, look, it's a cash. It's an easy transaction, and that's just not the case. That's where they're business people. I mean, you can't blame them, but if you're truly wanting to sell your home, get with a real estate agent if that's what you're looking to do. And kudos to you for having your mortgage paid off. So you're in another good position. You've had some good callers that have their mortgage paid off. Yeah,
we have good people here. High grades for all of you. Danny in Rolla, Missouri. Hello.
Hi.
Hello.
I want to make a statement that not everybody should be a homeowner, even if they qualify, because the same thing with a car, if you change maintenance, the general rule is you have to own a house, own a piece of property for about 5 years. If you buy a piece of property and you sell it within 5 years, you're probably going to lose money. And that's fact.
Well, let's ask our guest about that, GW. If you hold on to a piece of property for less than 5 years, are you going to lose money?
God, well, that's a big question based off, one, how much did they put down? And two, you're right. Not everybody's made for home ownership if they're not wanting to keep up the maintenance and stuff. Again, it's case by case, and that's where I have those hard conversations. I'm going to know, if they're ready to buy a home or not. Look, I've been doing this for 19 years, and I can just, after I have my consultation call, because I'm real good at listening first, I'm not going to tell you what to do. I'm going to listen and see what your goals and objectives are. If I know, like, man, this person is not ready or mature to have a home ownership, then yeah, you're absolutely right. I can't agree more. Now, based off 5 years, you're not going to make money. I disagree with that. I think it all depends on the current situation of how much they're putting down, based off where they bought, what market are you buying in. I can tell you right now in Texas, I mean, people are making money if they're selling in 5 years or less. That I can guarantee you. But again, it depends on your market too.
All right. Are there some people who are just temperamentally not suited for home ownership, GW?
Well, yes, but again, that's where I think let's start educating them. Why are they that way? Let's start showing them the benefit of home ownership, and let's try to help them understand the benefits of owning a home.
All right. Adam in El Waso, Michigan.
Yes. Hi, Jimbo. My question for your guest is, with my mortgage, I had to file bankruptcy. And I'm on the tail end of, I believe you have to go 10 years on a bankruptcy before you credit. I'm just curious if I'm going to have difficulty trying to acquire my equity, because the home has built up a lot of equity in that time frame. And I think I'm like 2 or 3 years out before my bankruptcy, before I'm all done with that. I'm just wondering, does he think I'd have any difficulty trying to get a loan or to refinance the home?
No. I mean, once you're completely out of your bankruptcy, I mean, it's a new slate. I mean, you're saying the rule of thumb is, and I don't have it in front of me. I mean, it used to be 7 years. Now they've actually, I think, even shortened it after that. How long is your bankruptcy for? What kind of bankruptcy was it?
It was unrelated to the home. It was a business from a while back. It was a business that went south, and I wound up on. It just.
How many years has that been now? How many years have you been in the bankruptcy?
Oh boy, I think I've got. I think 2, maybe 3 years. If you're, I believe you. Yeah, I think it's 7. You mentioned 7 years.
Correct.
If that's the case, then I'm probably. Yeah, I think I'm still in that range. 2 years.
Okay. So you've been in for 5 years. You've been in for 5 years, the bankruptcy.
That was a question for you, Adam. Have you been in bankruptcy for 5 years?
Yes.
Okay, got it. Okay.
Yeah. So once the bottom line is, once you're out of your bankruptcy, you've got a new clean slate, and you should be fine as long as the home is back. You can be able to get the equity. Yes.
GP Theriot is our guest, and he's mortgage advisor at the Dallas-based Theriot mortgage team. Here is Paul in Zanesville, Ohio. Good evening.
Good evening, Jimbo and GP. Yeah, my wife and I have been in our home for almost 30 years. We almost have it paid off. We've also been getting those cards in the mail, to want to buy cash. But I also have a neighbor across the street's car lot, and he's already bought all the property behind him on the other side of the street, and he wants to buy mine, or my wife and I's, and he also wants to buy a couple up the street from me. But I'm kind of holding out. I mean, I don't really think it'd be a good idea to just take the cash, and I was just wanting to know if you, what your idea was on me. Do you think I should hold out for the deep pockets?
Yeah, what I would do is I would get with a real estate agent and have them do some comps for you just to see, hey, what's the going market price going for in your neighborhood or right there, and that'll give you a better, clear picture. I mean, just by saying holding out, I mean, well, first get the data. I mean, know truly what could you sell your home for, and you're going to get that answer from a real estate agent.
Okay, well, that's what I'll do then. Thank you so much.
Absolutely, yeah. Absolutely. Better to have somebody working for you. And that's what a real estate agent does. 1-866-50-JIMBO, 1-866-505-4626 with GP Theriot as we go to Danny in Flowery Branch, Georgia. Good evening.
Hey, you guys. Jim, hadn't talked to you in a while, but, it's a sad thing that our high schools, what have you, can't get you two guys together with a curriculum and teach some of our young folks. Just all of this is just basic common sense. There's a lot, like GP, like you said, to follow the data. Every situation is not the same. In regards to the caller that, a lot of people get locked in on some of these things that don't apply to everybody. If it was the 5-year rule and not making any money, I wouldn't be making any money. We're not a predator. We go out and we buy properties at a lower rate. We have subcontractors that come in and make them find homes to put on the market, and we make a little bit of money.
So you are in real estate, I gather, Danny.
Well, somewhat. I'm not considered. I'd never really considered myself a real estate agent. We have folks for that, but more or less, we just buy property, make it a little bit prettier, and sell it for a profit. And have been successful in Northeast Georgia and the upstate of Jim, you'll like this, of South Carolina.
Mm-hmm. Very good. All right. The thoughts, GP?
No, I love it. Hey, look, I'm all for investors out there. It's just I see a lot of people taking advantage of it. You sound like a good person that you're going to, help people too. It is a business. Look, I've done the exact same thing. I've bought properties at the right place, right time, where I got a good deal and I was able to flip it, and we improved it. So I'm not knocking that. I'm just saying these mail outs, they send them in mass, and there are people that are taking advantage of sellers like that.
All right. Very good, Danny. Thank you, sir. Monica in Moberly, Missouri. Hello.
Hello, sir. I have a question. I paid like $55,000 for my house, and I'm disabled, so I don't really understand things. I just sold it for $29,000, and I think if there's nothing I can do now, is there? Because I just looked up on Google, and I was listening to your show, and I Googled my house, and it's worth anywhere between, well, obviously the price I got it for, because I've made some improvements to it, and $75,000. And I sold it for $29,000.
Well, you say you have sold the house. Is that what you're saying?
Yeah, so there's nothing I can do. Yeah, right.
Well, I don't know, unless you can talk them out of honoring the transfer, GP.
Have you closed on it? Have you signed the documents and closed on it?
Yes.
Yeah, unfortunately, there's nothing you can do.
Yeah. Sorry about that, Monica. You got to be careful before you put the old name on the dotted line there. Jim in Cranberry Township, Pennsylvania.
Okay. I rented a farmhouse very cheap for 34 years, and they finally sold it. Wouldn't sell it to me because they wouldn't split it up. So it was on a lot of property. Now, at the age of 66, is it possible to get a mortgage and buy a place?
Absolutely. Yeah.
Okay. Will they go? And what about being self-employed, like a Lyft driver and things like that? Is that you have to show a certain amount of it? I guess it's about income.
Yeah. So with self-employed, that's where it's critical that you're working with a mortgage professional and not going online and working with, I call them these cookie cutter loan officers. you've got to know somebody that knows how to read your tax returns and give you proper advice of, maybe not write off as much on your tax returns for this year coming up, or you might be fine. You just got to have somebody take a look at your tax returns to see what they can use for income, and then that'll give a good starting point to kind of give you the proper strategy of how can I qualify for a mortgage.
Yeah. But the answer is yes, Jim. Absolutely. Go for it.
Yeah, again, you don't know what you don't know. I'm sorry, go ahead.
Another thing is I found some acreage for sale. Is it borrowing money on land only? Is that difficult?
Okay.
No, that usually you'll have to go directly through a bank for that and do like a lot loan, land loan for that. What would you want to do with the land? Would you want to build on it, or what are your thoughts on that?
Yeah, I would want to have the land and maybe put a log cabin on it. I'd like some acreage.
Okay, well, I'll tell you what. We'll just wrap up this one call after the break, because we have a break that doesn't move here. So stay on the line, Jim, and we'll get the answer in a moment. And as the last break had intervened, Jim in Cranberry Township, Pennsylvania, was asked by GP about what he planned to do with a certain piece of property. So what were your plans for this piece of property, Jim?
Well, I think I'd like to. It's 38 acres. If I could get what I was wondering is if me and my son could both be on the loan, and then he would have 19 acres, and then I would eventually, in a couple of years, build up some more funds and build a small cabin on it.
Yeah, you can absolutely add both you guys in the loan, but for the land, you're going to have to go through a bank. And the reason I asked the question, what you plan to do with it, because they've got options out there where you could do like a 12-month lot loan where it's interest only to give you time to get your plans and specs to build. But it sounds like that's something down the road. So I just look at getting some type of land loan. And a lot of these land loans will let you pay interest only if that's an option. But absolutely, you can do it and add your son to it with you.
Okay, Jim.
That's what I need to know. Thank you very much.
Yes, glad that you were on, and thank you, GP, for being on tonight. Much appreciated, sir.
Yeah, it was fun tonight. Thanks for having me. Hopefully we had a fun time, and if you need me again, be honored to be back on.